Elle a rentré, elle est rentrée là-bas, elle a laissé tomber parce que. Non, elle laissé tomber.
cognizant. I got caught on that. I touched my computer the wrong way, so I'm just not going to go near it. Otherwise, it just fucking blanks out the whole thing.
I won't touch it. I'm going to do like yesterday. I'm going to start to talk or even sing. We were listening to the radio this morning, and it was Prince is putting on a new record.
This is on.
I don't mind.
Yeah, okay, yeah.
This is what I'm saying. I'm going to start to track attention a little bit.
Okay.
But what's Prince putting on a new record with Prince? You know the singer Prince who died?
Yeah. They're putting on a new record?
Yeah.
As unreleased music?
Well, in part or remastered.
Okay.
Get Maggie's attention. Excuse me, ladies and gentlemen. Veuillez m'excuser. I will be very insist that we keep the noise level as much as possible low, and actually to the minimum. That means do not chat with your colleague to the left or the right during the presentations. And I'll threaten you folks. I know some people know me. If I catch anybody, I'll throw you across the border. But I really insist, in consideration for the people who come and talk, that we keep the noise level to the minimum. And I understand when we use culture, it could make a little bit of noise. That is totally normal. But what I insist on is the chatting, okay? So everybody's aware? Tout le monde est au courant? Merci. I have the honor of presenting our next key speaker, Mr. Gianni Kovacevic. Did I get it right?
Yep.
Excellent. I'm happy. I think a lot of people know him. I heard his talk yesterday. It was the most entertaining. It's an eye-opener. And so with that, Yanni, the stage is yours.
Good, thank you. Thank you. Thanks, Eric. And greetings, everyone. And I just want to first say thank you to Manuel Bali and his father for inviting me at this opportunity to speak in Geneva, where I have not spoken in probably 2 years. I frequently would come probably 3 times a year with various investments that I've made. I take the CEO of those companies and put them in your lap. But I haven't been here because I've been rather busy. And we've been basically wrote a book titled My Electrician Drives a Porsche, which has now sold over 18,000 copies. And with that came a global adventure talking about energy. You are investing in the energy business. And so to understand this, you have to look at energy in various buckets. So in the next 27 and a half minutes, right, Manny, I'm going to accelerate your familiarity. Why is my book titled My Electrician Drives a Porsche? What you may not recognize is my background. The first 10,000 hours of experience was in electrical studies. We studied power systems. My brother Mario still does it. So I'm very fluent in understanding what I say the future of energy is electricity. So if you cut all this stuff in half, we understand how it works and what it takes to make it possible. I come from Vancouver. And what software and computers are to Seattle is what oil and copper are to Vancouver. That's how I stumbled into investing and understanding the oil business and the copper business. But you really got to put the 3 together. When I was on my tour, I traveled all over the world promoting my book and having opportunities to speak in front of very interesting audiences. I'm a frequent contributor to CNBC and Bloomberg. And last April, when I was in the New York studios, it caused a bit of a commotion when I said that oil and copper are going to decouple, the price of them. So this is something that we're going to analyze through this investment. And if that's true, because my heart beats as an investor, I want to invest in the future. I recognize that probably most people here should want to do the same thing. Don Cox out of Chicago, the brilliant economic historian, he would always say, never invest in the story on page 1. That's the efficient market. Invest in the story on page 16. That shall one day be on page 1. So I'm going to try to enlighten you on some of the themes that I think could in fact enter and become on page 1. What you're looking at here is the various commodities, many of the commodities that you invest in. This is the absolute value. So you look at the tonnage or ounces that were produced multiplied by the commodity. This is going to change. Within this energy pivot, there's going to be winners and losers. So these circles, I don't want to call them bubbles because some people get the wrong impression, but some of them are going to get bigger, some of them are going to become smaller. And if you look at the oil market, $1.7 trillion, by far, it outweighs all of them combined. So if you look at the global commodity indexes, the GSCI, the MSCI, things like that, when oil collapses, they throw the baby out with the bathwater. Or better put, if I want to be colorful, when they raid the house of ill repute, they arrest everyone, including the piano player. So we have to recognize that. This is a date where we can look back historically speaking. This is the day the world changed. I'm speaking about energy. January 10th of 1901. Of course, I speak about the first big oil discovery, which was Spindletop, Texas. Before that, the oil business, which was really whaling, and then the early oil they found in Titusville, Pennsylvania, and other small parts of the United States, it was really an illumination business. That's what oil and lubrication was. So important was whaling to the American economy, it was the 5th or 6th most important industry in the nation. But all that changed because of this. This is a modern-day depiction of Spindletop. January 10th, 1901. So prolific was this oil discovery that it was gushing at the rate of 100,000 barrels a day. They could not cap it. This happened in coincidence with all the modern inventions that we still take for granted today, namely the internal combustion engine, transportation. But if you look at the headlines and what you're reading and what confuses many investors, have we actually entered the beginning of the end of the oil age? No one knows conclusively, but what we can do, like detectives, we can look at clues historically. How did we get to today? And so you have to understand energy in those 3 buckets. We also look at the added pincers of climate change, governmental policy, and you look at these 3 cartoons. I'm not going to talk about climate change so much. It's a very politicized and it's a very hot button issue, a very good, as they say, bumper sticker issue. I look at it more about the technology. Do these things, the so-called green energy, does it work in the first place? And of course, pollution, particulate pollution, which is, as my friend Robert Friedland would say, the apocalypse. You're looking at a picture of London, England. The scenes from Beijing where you cannot see the blue sky, I mean, this really is a global problem in all the big mega cities. I am an investor. So if I leave that aside, when you're addressing these things by way of technology and green energy, this is, as a capitalist, it's the future. I want to invest in these things. And so when people shy away from the future of energy, it insults me as a capitalist more than it does a realistic environmentalist. Made in China? The Chinese don't like this term. The new term is innovated in China. Of course, the 2 largest economies, the American economy, $18 trillion of output. China's now about $12 trillion of output. They're the leaders in all of green energy. Electric cars, electric buses, wind power, solar voltaic power. You are not clubbed in the head with a 2x4 because you are dealing with these things by making technologically advanced energy. And the same should be thought about with governments around the world. This cartoon is something where we boil down energy to 3 buckets. You see the generator, you see the transmission lines, and then you see my friend here, the utilizer. You and I are the customers of energy. Without future customers, there's no requirement for the rest of it. So it truly is 3 independent buckets. You have to be fluent and you have to understand the shifts in how they're going to impact the way we create or generate energy, the way you transfer energy, and of course the utilization. How do we use energy as consumers? I do believe there are going to be more people consuming more things, so we are going to require more energy in the future. Motorization is the shift that really took place when we went from the animal horsepower age to the machine age. 55% of the oil consumed every single day is consumed with transportation fuels. the internal combustion engine, motorization as they say. When you make an internal combustion engine more efficient, you use less fuel. Does anyone dispute that scientific fact? Okay. The 45% of the world's electricity is consumed by an electrical motor. When you make an electrical motor more efficient, you in fact use more copper. Does anyone dispute that scientific fact? If you look at the breakdown, I use a very unscientific graph. It's easy because I speak to a lot of audiences that don't understand the oil business. So you really have to break it down. But if you're a petroleum engineer, you should find these next statistics interesting as well. Every single day, we use 96 million barrels of oil. 45% of that is actually not used by transportation. It's used to make enhanced products, plastic, polyester, petrochemicals, fertilizers, and such. I will suggest to you that in the future, more oil is going to be consumed for enhanced products and increasingly less so for transportation fuels. Here's a more scientific graph. Big Oil and the IEA, they're the so-called experts. They believe that in the next 15, 20, 25 years, we will consume more and more oil all the way till 2040. What did the IEA tell us about solar power? These are the experts. In the year 2010, they told us it would take 16 years to achieve 150 gigawatts of solar power on a global scale. They were wrong. It took 6 years and the world delivered 290 gigawatts. I'm suggesting that sometimes those that know it the best love it the least because they've been disappointed the most. They forget about you and I as a consumer. See here? What about efficiency? What about adoption? What about technology? What about the millions of people that work around the world? There are armies of people that are trying to create and enhance so-called green technologies. So you have a 35 to 40 million barrel a day discrepancy between the most optimistic and the most pessimistic scene. I say that innovation, adoption, and technology, they are the death knell of the oil business. We already know the date it occurred. Just like that date of January 10, 1901, we remember to this very day, this is a date that you shall remember. This was officially the day that the oil industry capitulated. Now it's no longer a business where you're going to hand that to your grandchildren. What do you do if you have 100 years of reserves? That's the question. This is the day that OPEC capitulated. This is when the Saudi Arabians said, we are no longer the swing producer. They said no more. The oil price collapsed at the end of 2014 into 2015, and to this day we have this funny imbalance, 2 million barrels a day of excess supply. Most people are not aware of how the oil industry has changed. This is a conventional way we used to drill for oil, vertically. You can hit the pay formation. Not anymore. Horizontal drilling. This is a game changer. I speak in front of audiences. I'll go to Houston or Calgary, people in the oil business, and they themselves are not aware of the statistics. Let me enlighten you. This is a picture of the Permian Basin. This is in the west part of Texas. This is where the oil business has changed. The shale formations, which are typically 1 kilometer deep in the United States. This was really the marriage of two gentlemen's companies. I'm speaking about George Mitchell, Mitchell Energy, and Devon Energy. And what George Mitchell did, he owned about 60% of his company, and they were just north of Dallas, Texas, and they were drilling for gas. And he encouraged his team to continue fracking vertically, and by 2001, 2002, they basically solved it. They decoded the fracking code. And the guys up in Oklahoma City, Larry Nichols and his group with Devon Energy, they were the ones doing the horizontal drilling. And what they decided, we will marry these two technologies together and let us see what we can do. 2002, they drilled 7 wells. 2003, the combination of these two gentlemen's companies, they drilled 55 wells. Do you know how many wells the American industry has drilled between then and 2015? I will start by saying Saudi Arabia, the world's largest producer of oil, it produces its oil from 3,000 wells. They did 150,000 horizontal frac wells, 2 million individual fracs. This is a game changer. In a few years, do you know how many horizontal frac wells the American companies did outside the United States? 200. Actually, less than 200. That is the primary reason why the Saudi Arabians decided to no longer be the swing producer. They were about to go and start doing this outside the United States. The cost came down in 2013. You can see it did used to cost $70, $80, $90 to lift the barrel out of the shale formations. Now they're doing it for $20 and $30. So what's going to happen to the price of oil? This is a really important question. It's all about supply and demand. If you look at the spread here, right now it's 2 million barrels a day. I will strongly suggest to you that in the next 5 or 6 or 7 years, demand is going to start waning. It's still important. It's still going to be a pillar, obviously a very important pillar of the global economy. But what shall all these countries do? Each of has some 100 years of reserves. The person that knows this best, his initials are MBS. And he's the most important person you should follow in the energy business. His name is Mohammed bin Salman Al Saud. 2 days ago he was promoted. He's no longer the deputy crown prince. He is the crown prince of Saudi Arabia. He's 31 years old, and he's one predominantly making the pivot in the Saudi economy. He had two choices. He understands that we are in dynamic times. We do not live in a static environment. So he had a choice. He could be a victim, or he must be a contrarian. Is he or is he not pivoting the Saudi economy into the future? Yes, he is. And it's called Vision 2030. They're going to float 5% of Saudi Aramco, the valuation to be determined. But what we do know is they are going to be investing hundreds of billions of dollars out of fossil fuels and into the future. And the future, my friends, is electrification. That's really what they're doing. Any way you slice it, one of the initiatives, they're using solar power to desalinate water, to irrigate the desert, and then export that technology around the equator. The divestment movement, which currently is $4.6 trillion of money under management, the leaders of this movement, the biggest investors in the divestment movement, are things like the Norwegian endowment and now the Saudi Arabians. You cannot make this stuff up, but for you it should be a red flag. We have this myth that big oil has suppressed the forward technologies. And sometimes people will suggest to you that it's the collective sort of collusion between big auto and big oil. We've all heard this before, right? And you've seen these early electric vehicles. I don't think it's so much collusion. You have to understand the automotive business if you're going to appreciate this pivot. This 1930s Maserati has 6,000 individual components. That's the same way we'll make cars today. See these German corporations? Why do I mention them? Does Japan have a petroleum endowment? No, it does not. Does Germany have a petroleum endowment? No, it does not. The biggest employer in the German economy is the automotive industry. Does anyone here dispute that? If you don't recognize what these corporations do, they make things like this. They make pistons, cranks, radiators, valves, gaskets, belts, chains, mufflers. How many mufflers are in an electric car? 0. Not one. This is how we make cars now. This is the future of the automotive business. So it wasn't just big oil or big auto. Think of all the corporations that feed into big auto. What about the dealers? You don't make money selling a car. You make your money servicing a car. There is no one that has been interested in the electric vehicle until now. They have a problem. There are more than one existential threats to this system the way it used to be. But big tech is knocking on the door. Now what this baby represents is the technology. If you don't incubate the very technology, it's the one that eats you. Remember Kodak Film Company? Blockbuster Video? BlackBerry? If they had invested in those early technologies, they would not have been gobbled. Big tech is now the leader. If you look at the world's largest corporations, I have a list here from 2006, but if you looked at that for 100 years, frequently would be big auto, big oil, big insurance, big banking. Not anymore. It's all big tech. Does anyone dispute that these are the largest companies in the world? Does anyone dispute that Apple Corporation has more cash than the combined market cap of Ford, Chrysler, and GM combined? Who is subordinate to who? And they're knocking on the door. But it gets deeper than that. If you're 12 years old and you have a cellular phone, you have your own personal chauffeur. Ride sharing. It's been so transformational that they find that people that are 22, 23, and 24 years old, they don't even have a driver's license. They are never going to be the customer of big oil. So if you're in that business, if you're in the business of being an Uber driver or sharing a car, and it's hard to sympathize if you've never done this. Look at the blue arrow. What I'm trying to point at is the sales. Last year, 88 million cars were sold, 1% of which were electric. Do you know that in 2006, the Chinese surpassed Japan as the world's second largest automotive market? 5.9 million units. The United States is the second largest car market. They are 17 to 18 million units. The Chinese are now 27 million units. That's the reason we had that big bump in oil consumption. But all that changes. The world's leader for electrification of transportation is and shall be and will be the Chinese, and the legacy will be felt around the world. I drove an electric car across America when I did my book tour. These were all the cities I visited. They tell me I have perhaps the most experience of almost any electric vehicle driver. Now, this is not an advertisement for Tesla Corporation. This is an advertisement for how it works. This is the tour I took. I drove 13,000 kilometers over 2 months in an electric car. And on purpose, I went the difficult way. I went day, I went night, I stayed at hotels, I stayed at Airbnb. There was never an issue. This works. This little company in 2 years was able to solve the charging system. There's 2 types of chargers. The one on the freeway, which charges your car in about 20 minutes, and the home charger, or a charger that this hotel would install so that when you're parked here, you charge your car. They are going to install tens of millions of these portable chargers in buildings all over the world, and it happens very quickly. This is not going to take 10 years. Tesla did it in 2 years. If Volkswagen, Ford, and GM were to get together, do you think they could do it faster than 2 years? Yes, they can, and yes, they will. For the old energy skeptics, this is an important graphic, because people will tell you that just because you have an electric car, you're charging it, in fact, with coal electricity or some sort of fossil fuel electricity. That might be true in certain areas, but not really. This is the way they're going to charge these vehicles. It's early days, it does work, and let's give them a little bit of time. The technology is only 4 or 5 years old. I'm talking about the basket system. But in America, less than 30% of the electricity is derived from coal and falling. And this is going to echo itself around the world. When you talk about electricity, it's important to understand the difference between a megawatt and a kilowatt. Your typical large power plant is 1 gigawatt, 1,000 megawatts. Quebec Hydro, which was the most famous example of hydroelectricity at its time, it took the Quebec government 25 years to develop 61 generators. It has a capacity of 36 gigawatts. Okay? I'm just using this number to give a bit of color. America, which you can see here, all the different power sources, has a capacity of 1,100 gigawatts. And in 7 or 8 years, they were able to convert 200 gigawatts of coal power to natural gas. China, which is ironically the same size as the United States, has 4 times the people, and I'll also put Japan and Europe as the 4 big electricity markets. China, with 1,500 gigawatts of capacity, they installed in the past 7 years 150 gigawatts of wind power, 100 gigawatts of solar power. To understand the gravity, the size, the immensity of what's occurring, and it's happening in country around the world, including Japan, including Europe. This box in Africa, there are 900 million people that live here. The capacity there is 28 gigawatts. I will suggest to you very strongly this is going to change. These people are going to require electricity, but it's going to be done in this kind of format. It will be done with a solar panel, a battery of some sorts, so they can charge 2 or 3 light bulbs, maybe a computer, and a hot plate to cook meals. Does he know this? If I could take the Donald, if I could take him by the hand, and we could go and we could see where the future was, where the jobs were, where the industry's going to be. Why can't America sell these products? Why should the Chinese be the leaders in all of the green energy technologies? If I could take them and show them how these batteries work, if I could show them, I spent half a day at the Gigafactory in Nevada, and if you look at this double battery, which is $5,800, very affordable for the average American home, and if you combine that with this solar roof, everyone's aware that Tesla merged with Solar City, and people hated it. The investors loved it. They voted 86% in favor because it's a trifecta. You have to have it. This is how this works. It's a roof, not a solar panel. It costs almost the same as a regular, conventional, high-quality roof. Looks the same, except it's a solar panel. Does that make sense? So if you look at this house, which has a solar roof, a battery, and an electric car, I think the world does not understand the gravity of what has occurred here. Because what this does to the incumbent energy system, it completely throws it on its head. If we go back to our green box, if we want to invest in the story that's going to eventually be on page 1, I'm going to highlight a few things for you. So we've already established some scientific facts. One, we already know that if you make electrical motors more efficient, they require more copper. If you adopt from an internal combustion engine to an electrical motor, you're going to require more copper. If you install wind power, solar power, rule of thumb, it takes 400 to 600% more copper for each megawatt of utility. It's the copper intensity. Offshore wind, 10 times more copper. Does anyone dispute this fact? If you make something more efficient, the low-hanging fruit in energy is efficiency. This is a complicated formula. You don't have to worry about that. You have to take the aluminum outside of the product and replace it with copper. Now, I will put a caveat. Aluminum is a very important part of the future as well. Depending on the application, there will be increased utilization of aluminum as well. But generally, if it's a high-quality electrical product, you want to have more copper. And the old way of thinking, the PhD, the economy, if the Chinese economy slows down, the copper industry, because it's an industrial metal, shall be boring. That's the old way of thinking. That gives you reliable 2% growth, but it's the invisible hand. The invisible hand in this industry, and it's so pervasive, it's from the smallest village in Africa to this very hotel. If you want to make things more energy efficient, it shall require more copper. And even the bean counters are coming up with this. These are the 5 major commodities. And if you look at it, the application of them, the only one they see growth in is copper. That's interesting. They have nothing to do with mining. They're bean counters. But they're coming to these very obvious conclusions. So if you look at where the copper comes from, now that's my business. I know people that produce copper. I've invested in copper for 15 years. Lots of will here. I gave the keynote at CESCO this year. Lots of will in that room. But it's not the will, my friends. It's the money. You can't finance it. And that's the strange thing that's happening right now. Because no one's building a copper mine. Unlike the oil business, oil comes from 4,700,000 wells. America's oil supply comes from 500,000 wells. See this? Who's going to build it? We invested $200 billion in exploration in the past 15 years. They just didn't find anything. It's all low grade. But when it takes 15 years to build a copper mine, these are the 20 largest copper mines in the world. They give us 45% of primary copper production. We need to build, on a slow pace of growth, 600,000 to 700,000 tons of copper every year. That's 3 large copper mines. But what if it's more accelerated? What if it grows by 4%? Where's the copper going to come from? That's why I come back to this. I believe that this circle, the copper circle, is going to outperform every commodity in the coming years. It is the Achilles heel, the keystone, the magic component of green energy. No new copper, no green energy. No higher copper price, no new copper mines, no green energy. So if the first question is, do we need more copper? The answer conclusively is yes. Where then shall it come from? I will also suggest to you there are other circles that are going to be interesting. Now, I'm not an automotive engineer, but if you're going to have less mufflers in the future, you're going to have less catalytic converters in the future, these things might get pinched. Palladium and platinum. I'm just saying. I think lithium, cobalt, these are going to be interesting things to invest in. I think nickel and aluminum are interesting things to invest in. All I'm saying is recognize these circles are going to change. The old rule book does not apply. You shall throw it in the garbage. And so if we look at who finances this stuff, the junior industry has been destroyed. The broker industry, you need to invest in companies that can finance themselves. And I think the quality here that the Bally's pick, typically these companies have cash balances. They are able to finance themselves. The ratios that people traditionally have followed is gold and oil. I believe, and you're going to see this on the front page of the Financial Times, you're going to start seeing copper to oil ratio. This is the really important one, and it's going to break everything. So how good did I do? I went on Bloomberg, and I've been on CNBC, and they invite me regularly. How did I do? I said oil will decouple from copper. There's a 4-year graph. See how they're tethered? You can go back 40 years. 90% of the time they're correlated. So how did I do? I was in New York here. Decouple? Decouple? Hey, decoupled. And we haven't even started. If you can agree with me that oil's going to be boring unless political sensitivities, copper can't get financed unless the price goes higher. I will bet you that this goes way out of proportion. It has to. How's copper done against gold? It decoupled. The old rule book doesn't work anymore, my friends, because that's the dominant commodity, oil and gold. Copper is the cousin. 20 copper mines give us 45% of primary production, and it takes 15 years to build a copper mine. So my little copper bank, by a show of hands, who here has heard of Copper Bank from the IPO? A few people. There's the torque. Copper went up a little bit, but if you've got a company with exposure to copper, the torque is immense. So what is Copper Bank, for my final slide? If you recall Ross Beatty's Lumina Copper, when the market was bearish at all-time lows, he bought a bunch of copper deposits. He did it here. And then he sold them all. He was in Santiago, Chile in 2002, and they said, Ross, why are you buying these out-of-the-money deposits from us? These are useless. He says, well, I'm going to buy them, enhance the value, and sell them back to you in 10 years. He was wrong. He did it in 5. He sold them, these 7 projects for $4.5 billion. Buy low, sell high. It's exactly what we did in Copper Bank. So if you look at our peer group, these are 26 quality copper projects. They trade at 2 to 4 cents a pound in the ground. Okay? And there will be value here because it's a very small space. 2 to 4 cents a pound. So what Copper Bank is, it's we bought a bunch of projects and we're trading at less than 1 penny a pound in the ground. Except that we have a problem. We're going to revalue, but we start drilling our projects in July in Alaska. So I believe that we will get re-rated to our peer group, and I believe that we're going to have success in exploration. We got to put the drill machine to work so we could get revalued 2 ways. So I encourage you to follow the news, and you can get a ton of interesting videos on the Energy Zone at Copper Bank's website. Hours and hours of entertaining videos, and that's where you can further your education. Okay? Thank you, everyone.
take our time. We'll do the transfer. Okay.
Where's our computer?
Ok. Et bien qu'après la présentation, il y en a encore une autre. Ok, jusqu'à la fin. Je leur dis. Hein. Il est là. Et ensuite, on va où?
Is there volume on this one?
Yes.
No, on the computer. Is there a sound? I don't want sound. But I don't want it to come out. My video when I play it, I don't want it to be going and over what I say.
Oh.
I don't know. 15.
This is the live one. TV. This is the one. So I don't think it's connected, so it should be that one.
So I just don't.
Do I click on it?
What?
I click on it.
Yeah, you click on it.
It's very noisy, but I think you'll be okay.
Parfait. Yeah, perfect.
Okay, what's going on here? Where's my chords?
This is the pointer.
That's the point of the
Well, the star is the pointer. This is the recorder. Exactly. Okay, ladies and gentlemen, we had a little technical change to make over here, but I just want to maybe just another hand of applause for Yanni, because that was a very insightful presentation. I'm going to jump right to the next presentation. We have two more, so I ask again that we keep the noise level to the minimum, and you have the patience to listen to two other great speakers. First one is Michael Kurlock, who's the VP of Corporate Development and Information. I got that wrong.
Investor Relations.
Investor Relations. Michael's a third-generation Sudbury mining person. He's a graduate from the University of Western Ontario. He's going to present us Mag Silver, which is in Mexico, I think one of the best exploration plays in the world. So, Michael, the floor is yours.
Great. Thank you, Eric, and thank you all for coming today. So I'm going to take a few moments of your time today and walk you through MAG. MAG is a silver company, and one that I hope at the end of this presentation shows you that we're a rather profitable and robust company. So let's move forward. So I'm going to be making some forward-looking statements today. But one of the things that MAG has been successful at is making forward-looking statements turn into fact as we move along our process of from discovery to development and ultimately production. So this is our decline. It's an underground tunnel leading to the deposit. I don't know how many of you have seen one before, but this looks more like a Swiss tunnel to me than anything. This is the reason we show this is quite simple. It shows the commitment to the project, because you don't invest this kind of money in a project unless it's going to be a long-term mine and it's going to give you significant returns in the long run. Second of all, it shows you the quality of the workmanship, of the quality of the partner that we are working with. Is Fresnel, which is the largest primary silver producer in the world today. And the third thing that it talks about, or talks to, is the cost. If you were to look at a decline like this that doesn't even have this fancy 25 centimeter concrete base, You're looking at the cost in maybe Ontario, Nevada, Quebec, something like that, at about $4,000 per meter. Fresnillo was doing it for us at a cost of about $1,500 a meter. So it just puts everything into perspective. The commitment, the long term, and the cost effectiveness of working with such a fantastic partner. So let's talk about MAG. MAG started in 2000, and what we wanted to pursue was high grade and a high IRR, because we want to make money. And when we started the company, silver was trading at $5. So we wanted to ensure that if that ever came back to that region of $5, $10, we would still be producing a decent cash flow for our shareholders. And of course, you need district scale. District scale, of course, lends itself to what I just talked about, which is length of mine. So you want to put in that capex, but you want to return for a long period of time. Now, when you're looking for silver, you want to go to Mexico. And when you're in Mexico looking for silver, lead and zinc comes along. So that's why we have it up there. So our lead asset, our main asset, is the Juanicipio asset. It's 44% to our account and 56% to MAG's account. We initially had 100%, but we did an earn-in in 2005 for about $5 million. And this is the current agreement that we have in our JV of 56-44%. As I mentioned earlier, Fresnillo is pretty much the best operator that could be developing this asset. They've been working in this region, I'll show it to you in a few slides, for over 130 years. And they're very knowledgeable about these types of veins. They've developed 2 projects recently in the last 8 years, on time and on budget. And so they continue to do the same for us. And as I mentioned earlier, at very, very reasonable cost structure. The asset now is growing beyond the 200 million ounces of silver alone that we have, which actually places it at the 5th largest primary silver asset out there on the planet or in the world, however you want to say that. It has an average grade of 600 grams per ton, and I'm going to show you a slide which puts it into perspective relative to other silver companies out there. And of course, when you have these kinds of asset, or this kind of asset with these kinds of numbers, you come into an all-in cash cost of $661. So if, of course, silver's trading at about $18 now, you have a very healthy margin at any time out there. We have another asset, which is called the Cinco de Mayo. We're working to regain surface access on that. So right now it doesn't provide any value to our NAV, so we don't talk about it. When we get back on the property and we have something concrete to talk about, we'll then talk about it to our investors. So from financial position, as mentioned in the first, in an earlier presentation by Claude, we are a very strong financial position, and we have $134 million in the bank with no debt. So this just gives you an idea of how it's broken down. So the capex for our project, 100%, is $300 million. So to our account, 44% is 132. We've spent 20, as you can see here. So that leaves us about 112 to spend. We've got 134 in the bank. So we have a safeguard on top of everything, or in difference, the delta of $22 million. So one of the main things about MAG, right from the get-go, is our history of discovery. We have 7 discoveries in the last 13 years, and we've just found another one recently, so it'll soon be changing to 8. Now, as I mentioned earlier, if you're looking for silver in the world, Mexico is the first place that you want to go, or the #1 place you want to go. If you're looking for silver in Mexico, you want to go to the Fresnillo Silver District. There are 15 1 billion plus ounce, silver ounce assets in the world today. 8 of them are in Mexico, and 4 of them are in this region here, the Fresnillo Silver Trend. It has produced over 4.5 billion ounces of silver historically, which comes out to 10% of the world's silver. So any silver that you've ever seen, 10% of it has come from this region alone in the world. So let's zoom in from where we were. So as you can see, the tenants here, this is the Fresnillo tenements, and this is the JV here. So we're going to zoom into that upper right-hand corner because it shows us where we are. Here this swarming of veins, the red represents veins, they started mining in 1552, so over 500 years ago. Fresnillo has been operating in this area here for approximately 130 years. And this is only 6 kilometers from here to here. So it's a very small, tight area. As you can see, there's at least 3 head frames or 3 mines in this area. They have the old Santa Nina here, so it's a very concentrated area. When we first put in our first drill hole right here on the Juanicipio vein back in 2003, we hit mineralization on the first hole, so hole 001. That is highly irregular for the mining industry. 16 holes later, we hit the Valdecanas vein. The Valdecanas vein is a vein that holds 90% of the value of our company currently. Prior to that, Fresnillo had this property, and if you can imagine, erase all these red veins there prior to us getting our property and prior to us drilling. Once they understood our geological thesis that we had basically proven from discovering these 2 veins on our property, they came back to this area where they had previously drilled and found nothing, and found an additional 650 million ounces. So in the last 10 years, they've just found 1 billion ounces of silver right in this area alone. So it's quite a significant area, and it continues to grow, and that's the other part I'm going to talk about today. The first part is I'm going to tell you about how valuable and robust our project is presently, and then going forward I'm going to talk about how that even this region, after finding that kind of mineralization, it's going to continue over and above that. So one of the other things that happens when you discover early on in your mining process or even in your exploration process is if you find something, you just drill it out. You need to know how big it is. You need to know the value of it. You want to present that value to the shareholders. So you don't drill anywhere else. This goes 16 kilometers down that way. It goes 7 kilometers out that way. And we're just working in this small little area. The blue represents the JV, and what this green area represents, it's superimposed on top of the blue, which is within the same region, but it just means we own the surface rights, which means we have access to our property anytime. We own the mineral rights for 50 years with another first option by another 50 years, or to own it for another 50 years, but it's the surface area that is very important to own so that you can access and work on their property without any issue going forward. So let's look at some numbers just for some of the numbers people in the room. Of course, our asset mentioned earlier, and I have a slide that's going to show it representative to other silver companies. But it's an asset that is over 600 grams per ton average. It has almost 2 grams gold running through it, and then it has 5.5% lead zinc on top of that. So it's a very, very robust and significant asset from a geological perspective. Now, I've compared the Juanicipio projected UPEA here, which is an updated preliminary economic assessment, which in very simple terms is just a technical report that tells you all the engineering studies and the costings relative to that. And then the actual of the Saucito 2 mine here, that was just across the border if you saw. So the yellow is color-coded, nice yellow here and nice blue there, just so you could see what we're doing. And then we compare the two. So this is actual on this side, and this is what projected. So as I mentioned earlier, CapEx is $132 million. We have 134, and of course, you know that differential of $20 million. The other thing is, of course, the mine life is over 15 years now. So it's a nice long-term mine life. And the UPA is talking about 2,650 tons per day. That's the throughput that goes through and generates cash flow ultimately. If you compare that to the Saucito over here, same size mill at 3,000 and 2,650, but you have also a 22-year mine life, but you'll find out later in the presentation that ours continues to grow. But one of the very interesting things is the way Fresnillo builds and operates. What they do, if they have a huge mine, they build the mills in modules of 3,000 tons a day. That's what they're building us. Now, they've been working in this area here for the last 4.5 years, and they've been operating a mill of 3,000 tons a day. But because they're such good operators, they have raised that or optimized the throughput of that mine, or that mill, excuse me, to 4,000 tons a day. And so that's what they're going to be building for us. They're going to be building 4,000 ton a day operating mill for the price of 3,000 tons a day. So this is one of the latest developments, going from 2,650 to 4,000 tons a day. That's a 50% increase in metal throughput for the same price of the mill that we originally had to deal with, or that we will have to deal with from a cost perspective. The other thing is, this is a very conservative UPEA. As you can see, our on-site operating cost is 67 a ton. That's a projected value. If you look over here, the actual right across that borderline on a mine that's been on a mill and mine that's been operating for over 4 years, it's 40 a ton. I'm not saying ours is going to come in at 40, but you could probably say maybe 50, maybe 55 in that region, something like that. So this gives you an idea of comparing the different silver assets out there from grade, because grade is king. What you're looking for in mining is looking for one of the best assets out there. And as you can see, it's very demonstrative of comparing it to the other silver companies out there. But one of the key things that I mentioned also is size. You can't just have grade, because otherwise, in investing that capex, a large capex for short mine life doesn't give you a long enough return. Ours is the 5th largest asset in the world, primary silver asset in the world as well. So this just gives you a few more numbers. Let's take worst case scenario. Let's say silver goes down to $10 an ounce. At $10 an ounce, our company is still generating an after-tax IRR of 15%. So minimal downside in worst case scenarios, and depending on where you think silver is going to go, you can just see the return from that perspective. The other thing that's very interesting too is our after-tax cash flows. On an annual basis, based on the 2650, you're looking at $75 million per year. If you go up to the 4,000 tons a day, which we're doing, you're looking at an after-tax cash flow of over $100 million per year. So our capex to get in is 132, and your payback's just over a year. So a very robust project. So where are we? We started in 2014. We're down the decline, our fancy decline, 3,500 meters. We're at the top of the vein system now, and we're just starting our big spend, mill procurement and construction, and we're going to be in production in H1 2019. This just gives you an idea of what we're going to be doing, and going forward, we're at the top of the vein. This is what the vein looks like, and we're going to be going down from there. So, from a financial point, or from a risk perspective, which there are many risks in mining, you can see we're very much a box ticker. But one of the main things that we've always talked about at MAG is the fact that we've always thought, even though this is a robust project and we have got this great asset and it's big and it's wonderful, we always thought there was more. Let's get to that. First, I'm just going to play a video here, and it gives you some perspective of how things went. So we're in that upper right-hand corner, and the vein is comprised of a west vein, or the Valdecanas vein is a west vein and an east vein. And this is the bonanza zone. This is what's going into production. This is what's been financed. We did some additional drilling, and we started to call it the deep zone. But then we wanted to close it off because we wanted to identify the parameters of the asset before we did our engineering studies. So we sank 4 holes 100 meters below the last known mineralization, and we thought there was going to be nothing there. Just absolutely nothing. And we wanted to do that so that we could just get to work. What ultimately happened is this area in where you saw earlier, P1. See, up here, the size of this asset, the bonanza zone, is about 1.2 kilometers in length. It's about 400 meters high, and it's about 6 meters wide in width, which is great for mechanization. You get machinery in there and everything. What happened on those 4 drill holes where we thought nothing was going to happen, we had an average of 22 meters of mineralization going from the first hole of 11 meters wide, true width and thickness mineralization, to 32 meters wide. That was, of course, news to us and a pretty significant situation where we thought there was going to be no added value, and there turned out to be significant value. So we continued drilling, and we drilled, and what happened is we found more and more mineralization, and we found what we now call the dilatant zone, or a fat zone, where you see that wide mineralization. We continued to drill, and this is going to spin in a second on a third area, because it just continued to grow down this way and that way, and we just didn't know how much. So what we're doing now is we're pursuing tonnage. We want to see how big this project can actually get. So we continue to drill, and the other thing that you should notice is that this is angled. This asset is angled, and as on a 55-degree angle, so as it goes deeper, it becomes more valuable or goes deeper into the JV property, not back into the property for Fresnillo. And as you can see there, it gave you an idea of what 32 meters wide means. What that means from a mining point of view is you use a different extraction. It means your mining costs go down at that point and your economics go up. So this was very good news to us. The other thing that happened too is we discovered the Anticipada vein as well. And that vein alone at this area, we're assuming or projecting that it's at 3 million tons itself, and it's only 100 meters away. So we have this very robust project that we're working on, and we have this additional vein structure that we have found. Excuse me. So just in a nutshell, what we have here is, again, just the Anticipada vein. As you can see, it's grown from being cut off here. It continues to grow down this way, as well as the deposit. And the tonnage is considerable as well. This gives you the metal grade distribution. In these type of veins, you have high silver at the top, and as you go down, the silver wanes and the base metals start coming in. And that's indicative of the red, which is of course thick, and you can see here silver. Gold is kind of a little curious on this deposit because it's supposed to be just along the top, but it almost seems to be pervasive throughout the deposit. And at the bottom you have your lead and zinc. What is also new to us here is that copper has come into the system for the first time in this area, which is very unusual, and it's leading us to believe some other things that I'll get to. Of course, Eric's probably going to cut me off pretty soon. We'll skip this and go to that. So what we actually have going forward is we're getting towards the area. We're not quite there yet, but we're looking at potentially 2 projects. We have the first project here, which is of course the increase in throughput, which I discussed earlier, and that's project 1 on the top, and we're going forward and going to be accessing that and bringing that into production on the beginning of 2019. What's also happening when you have those larger tonnages, you have more tons per vertical meter, so you're more efficient on your mining techniques, and you have another project down below that is getting very close to the same tonnage, and of course increasing the overall size and value of the company. So what do we have going forward? The Bonanza Zone going into production by 2019, drilling continuing on the project with a 20,000 meter drilling program, a technical report coming out with an updated resource in the end of the summer, excuse me. So this just gives you an idea of who we're covered by, and our share price recently has been down with the JDXJ fiasco. We are very well represented by institutional shareholding. We have over 80% that way, and as you can see, pretty significant people on that list. We've got a great board, and of course we've done all this on 80 million shares. We've raised over $240 million over the time, but with only 80 million shares. So we're in a very good position. Our market cap is rather large for 8 people in a company, which gives you about $170 million market cap per employee, which is a metric we like to use. And it gives you an idea of what MAG is about. Thank you very much.
Well, ladies and gentlemen, I had my hands full when I came over earlier on, but I brought my glass, so maybe I would just take the occasion after this great presentation of lifting my glass to say cheers and congratulations to Mark Kolak with MAG, and also Guiani for his presentation. So, à votre santé, mesdames et messieurs. Cheers. Sorry about that, Jean-François. I just had to... So I have the pleasure of introducing our next speaker, which I will ask you guys to stay in the room and listen to this story. I think Manu Bali offered that if you all stay, he'll offer you a bar of gold, or I don't know, Manu, sometimes he's serious, he's not serious, but yeah, I insist that you stay and listen to this last presentation, and that we keep the noise down level as much as possible down. So Jean-François is Vice President of Critical Elements. We had Yanni that presented about the eye-opener about where copper is going and other elements, but Critical Elements is in the lithium industry, and so this will be interesting to hear the insight. Ted, but I'll just really summarize by saying he's a graduate of the HEC, which is École des Hautes Études Commerciales in Montreal, and should work.
Yeah.
Excellent. Okay, so I'll leave you the floor.
It's fine. Which one points? Start. Excellent. Thank you, Eric. Bonjour. I hope everyone enjoyed and appreciated the talk of Gianni. Sorry. Our project is a lithium project, and I'll run you through, and it's highly related to the presentation that Gianni did but before, so the usual disclaimer. This is a slide that expresses maybe the back end and the commitment of the automotive industry that just went up in the last 18 months. 5 years ago, lithium was a vision. There was sufficient production worldwide controlled by Rockwood at the time, FMC and SQM, and further along with Tianqi out of China. And that was about 90% of the global supply out of those four producers, totaling about 200,000 tons of lithium carbonate equivalent per year, was sufficient to cover the worldwide need of lithium. What became firm in terms of growth in the commodity was announcements that were done and signed contracts in 2016 by the German automotive industry, companies like Daimler, BMW, Volkswagen, and mostly in China. If you want to have a license plate in China and you want a combustion engine, your waiting list to get a plate will be more than 18 months now. If you want an electric car, you'll have it instantly. So that's the market, and that's the extension of the demand. To meet emissions out of Europe for Volkswagen, after especially the Dieselgate, they need by 2025 to have 25% of all passenger cars to be electric. That means 1 car per 4 cars sold. This is a chart that illustrates how much lithium that represents. So you have market penetration per cars by percentage and the years. The broker analysts estimate average about a 10% penetration by 2025. Canaccord estimates about 15%, which represent 600,000 tons of lithium carbonate equivalent. What Volkswagen, BMW, Ford are pushing for is 25% market penetration. That equals 1.2 million tons of lithium carbonate equivalent. What this means, current producers announced already, and they are close to capacity in most of their assets, 150,000 tons of additional production. We need at least 10 projects like this one to come into production within the next 7 years. This is the math you need to look after. And if you say, well, there's tons of lithium in Argentina, tons of lithium in Chile, well, there's capacity limits of pumping rates at Atacama, which are reached already, and Atacama can only increase by 25 to 30,000 tons. Here's the limit. If they pump harder, and they've tested, the lagoons are going down, and environmental impact repercussion are not allowing that. This morning, Orocobre out of Argentina, which share the same soil of Lithium Americas, just announced stop of production because of high intensity snowfall. So what we are coming to the industry is a reliable source of supply with a hard rock deposit, with a simple, proven technology and simple open pit mining in Quebec. So, and what we have also in the last few years, with this special deposit that have special feature of purity and impurity profile, without requiring of higher purification process, we've been able to attract the best of the industry. And when you look at this, today Rockwood no longer exists because it was bought over the New York Stock Exchange for $6.2 billion by Albemarle. So Albemarle today controls 60% of the world active reserve of lithium, especially at Atacama and at Greenbushes in Australia. Stefan Haber was the CEO and president of Rockwood Lithium. Marcus Brun was the CFO of Rockwood Lithium. And David Buckley was the chief processing manager of Rockwood Lithium. So our asset attracted the best of the industry in the lithium world, with guys that already did it. We have as well a proven local mining team that executed different discoveries through, so we cannot duplicate talent, and it's a very limited talent available in this market. So what we're going to do is we're going to split the production phase by coming with a phase one, with the production of spodumene concentrate and tantalum entering into early cash flow as soon as 2019 and 2020, and come with a second phase to convert our spodumene concentrate into the lithium chemical carbonate. Therefore, the deliverables for the company is we're targeting the delivery of our feasibility in the first half of this year, which should come in the next couple of weeks. We'll probably try to avoid 1st of July and 4th of July, so you can count on the next maybe 3 weeks for that. Permitting is already started, and we're about to post our environmental impact study. Construction we're targeting for Q4 2018, and the ramp-up of production 2019-2020. The first phase will be constituted of 50,000 tons of technical grade spodumene concentrate. This product is the highest upstream value product in the entire lithium products that you can produce. 175,000 tons of chemical grade spodumene concentrate that is dedicated to the battery market, and 200,000 pounds of tantalum byproduct, which is not necessary for the project to be economical at all. It's less than 5% of the revenue. This will cost approximately between 220 million to build, US dollars, and we're targeting an EBITDA margin of about 100 million. Second phase will start to be built in 2019, to be delivered in 2022 and operated in 2023. And the only difference is the 175,000 tons of chemical grade will be converted into the 24,000 tons of lithium carbonate to the battery market. Okay? So for 2-3 years, we'll sell a concentrate, and then we'll turn into a chemical company. Phase 3, a chemical plant is about 30 years of life. So we have about 17 years of mine life here. So phase 3 will be to increase that, and we definitely have the legs to do it. By doing this two-phase approach, we minimize CapEx, we enter quickly into cash flow, which are robust cash flow, and we sell a very predictable and reliable product rather than the South American. Those are the products. So this is the technical grade. After roasting in a kiln oven, you can see there's no iron oxidization. This is the same type of product, but you can see there is definitely iron in it. The difference in quality is huge, and especially into pricing. The market for the technical grade spodumene is something that you use every day as Corning ware glass, Pyrex, heating cooktops, saran, stuff like that. nobody knows, but it's a third of the global market. And this market is poorly served because of the presence of iron in the majority of the pegmatite deposits. The global market is about 500,000 tons a year, right here, and it's only served by Talison out of Greenbush, Australia. The capacity of Greenbush is 90,000 tons. So where comes the rest? You cannot extract the iron from here. You can only extract it if you convert it into lithium carbonate. Therefore, the glass manufacturers are taking the lithium carbonate, they're adding some sands, some silicas, and so on to the recipe, and it costs them much more. So the material of choice is the technical grade, but they're only served from a fifth of their total demand. We're not replacing any, we're not competing against any spodumene. They're welcoming us. We've tested our material with 8 major manufacturers through Europe and Asia, and the project is already qualified and spoken for. This is a cost of about $300 a ton, and it sells between $1,500 to $1,800. The other stuff, we don't have the low iron spec on the entire ore body. Our second zone is a chemical grade spodumene concentrate. Australians are selling 5.0 as a benchmark, and it sells for about $800 a ton over long-term contracts. We have a 6.2 to 6.8% concentrate. So much higher concentrate value, should sell around 1,000 to 1,200 over long-term contracts. This, you need about 8 tons of this material to do 1 ton of this lithium carbonate stuff. And the lithium carbonate right now, long-term contract by SQM, which is usually typically a bulk commodity company, sells between 10 to 20% lower than the other companies that can reach pricing excellence by breaking down customer repackaging, which is the case for critical elements, and I'll show you why later. They sell for $12,000. Current best of class right now in the lithium space sells for about $14,000 a ton. Our position, if you look in Quebec, Montreal would be right here, project is right here. We are a dominant landowner in the lithium district. Galaxy out of Australia, which is an upcoming ramp-up producer, is about 150 kilometers from us. Nemaska is right here, and our main asset is right here in the Texas shape form claims. We have all the extension of Nemaska. This is where we have the Rose. We have 17 years of mine life. We have a new discovery right here that average grades of 2%, which will be highly investigated shortly. We should have a drill rig in the next 2 weeks there that is totally carried interest for us by a joint venture partner that we have out of Australia. So we're not spending a penny, and we're carried interest until feasibility. We have a 2% royalty on their 75% interest, and we have a right on the products. You can see on our main asset, the lithium outcrop surface, the power line is directly on site. We have 3 power lines surrounding the deposit, and it's really a surface deposit. We have as well the First Nation agreement in place. This is as well another advantage of being low impurities. Low impurities means less filtration. Less filtration means you lose less material. So this is from the first phase here. So open pit mining, crushing, grinding, the magnetic separation removes the loose iron in the deposit and the tantalum byproduct. So by removing the iron, we have a byproduct that comes out with it. So that's our first revenue. The mica removals, where the Australians are struggling mostly, and the concentrate production, all of this is by flotation. So no technology, no black box, we generate a clean concentrate, and therefore we have already a revenue stream right here. Then we build a second plant. We have the highest recovery of the entire market because of the low impurities. The average yield overall from open pit mining to lithium carbonate is around 60 to 65%, in the best in class. We are at 81%, and we've posted 3 years of metallurgy, full disclosure, with all the pilot plants result. Nobody in the lithium industry did that. We wanted to put pressure for investors to understand that this is a special asset. On an NPV base with $10,000 or $10 a kilo for lithium carbonate, it would be a $1.4 billion NPV. I would moderate those numbers because this is at a par dollar US. Now, Canadian dollar is largely undervalued to the US, so CapEx at that time was estimated lower, but the commodity increase in Canadian ratio would make it. But it was a global integrated lithium carbonate buildup. So it was not a sequence two-phase project, but it gives you a sense of valuation. The IRRs are very, very strong. We have an offtake partner. It's a German company, privately held, out of Hamburg, a father and a son. So only in Europe you get those kinds of business still. They make about 7 to 10 billion euros a year. They are a specialty chemical distribution company. The way they make their money is they really focus on 60 different products. They were highly tied up with Rockwood Lithium, so you can see therefore an association. Stefan worked with them a long time. They've been 20 years in the lithium distribution, and their goal is to reach price excellence. If a company like Critical Elements wants to tackle the world with lithium products, you will need to build warehouses, local sales team in Asia, same thing with Europe, and be just in time for the small, very high-tech battery manufacturer. Then your SG&A goes up to the roof. What we've decided is Helm is into 31 different countries, 100 offices, all the infrastructure in place, and they've committed for 25% of the CapEx to earn 25% of the project. So if you look at Critical Elements, we are almost spoken for all the equity we need to build this project. The next step is to put the feasibility, get the debt inside the project financing, and go towards production. Helm has a solid balance sheet with $1 billion in cash and is totally capable of doing this check. This check will come 60 days after feasibility. Also, Helm provided us $4.5 million to complete that feasibility, and also they provided all their technical expertise on the chemical side with 2 project managers. One was for Dow Chemical, lead project manager, and had 400 employees. So as well, we have a good team of people to build a chemical plant and a local mining team to build the mining operation. I think it covers it well. Financial information. We have 160 million shares fully diluted. Basically, almost no warrants. The only warrant holder of significant would be Helm at this stage, with 3 million warrants at $1.07 and 1.5 or 2 million warrants at 77 cents. The rest is all got exercised in the last few weeks, which were about 35 cents and was mostly the overhang on the stock. We have one significant institutional shareholder, which is JP Morgan Asset Management. We management fund most of the development of that project between the year 2012 to 2015. JP Morgan gave us $6.2 million in 2016 with Helm to give a treasury of $10 million. We've always financed at premiums. We've never discounted ourselves. We have a special asset to create a $1 billion company. We didn't want to give it away for cheap, but we think now that institutions will start coming at us with better offers. Most of the life of the company was trading between 10 to 20 cents. We've invested $20 million on the project, which means if we would have done that, we would have issued an average of 100 to 200 million shares, not counting the previous structure. So we've kept dilution pretty tight. When I came in 2012, we only had 120 million shares. So we've did the work pretty much. So that would make it for us. Thank you.
Merci Jean-François. Great presentation. Ladies and gentlemen, we're a great audience. I want to applaud. Give everybody an applause. So we're on time. What exact time is 2:45? 2:40. So we're actually even earlier. So again, I just want to thank you for your attention. And this closes the 14th edition of the Swiss Mining Institute conferences in Geneva. Alors, mesdames et messieurs, je vous remercie encore et je vous dis à la prochaine. So you are free to go. Some can cross the border, some can stay. Au revoir, mesdames et messieurs. Bye bye.